Silver Institute put out a piece a month or so ago where they projected a 300 million ounce deficit in silver for 2020. And obviously, you're one of the people that the world is counting on to bring us silver. So what could you tell us there? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited in that one of these silver companies, as I've talked with different people in the world and different companies, investors, that comes most highly regarded these days, not legal financial advice, but just for further due diligence, would be Integra Resources. And the man who runs that, George Salamis, joining me on the show today to talk some silver market, and then also we'll dig into the company a bit as well. So, George, pleasure to have you on here today. You have you come recommended quite highly, so it's really a pleasure to finally meet you and sit down and talk. And how's everything going?
Chris, thanks, and thanks for having me on the show. And let's talk some silver. It's topical right now, and it's something we're thinking a lot about at the project. But I would love to have a great chat with you.
Yes. Well, why don't we dig into that? We're recording today on a Wednesday afternoon, and we'll pull up the silver chart, which about 25.5, roughly, a bit flat today. And George, before we hit the record button, you had an interesting point that maybe you could talk a bit about. You said normally when the type of things that are happening in the world happen, we see investors typically have turned to gold and silver. Some call it the fear trade, but when they're concerned about currencies, about governments, they turn to gold and silver. And in some ways, it seems like the price hasn't reacted. Any thoughts on that?
Yeah, I got to say, Chris, that head scratcher, right? Given the events of last week and the events leading up to last week, one would have thought that fear trade element that you mentioned would have driven the gold and the silver prices. It didn't. In fact, gold lost value. So that piece is a head scratcher. Are maybe the market's telegraphing that they're already looking past the events of last week and they're looking towards sort of stability, 100 days out, let's just call it, perhaps. I defer to what I call the holy grail of things that keep gold and silver, marching forward, or at the very least stable. Things like currency devaluation, which is, it's going to happen. It's happening now, and it's going to continue to happen for the next couple of years. No doubt about that. Low interest rates. The central banks have telegraphed that they're not going to touch interest rates for another couple of years. And now we're starting to actually hear about looming inflation, right? In the last few months, where the market was split 50-50 on looming inflation. I think the market's leaning more towards looming inflation probably a year out. So those three things are the holy grail of what drive precious metal prices, and those haven't changed.
Yeah, absolutely, they haven't. And as I also mentioned before we started, I have Andy Scheckman, who runs Miles Franklin, a precious metals dealer, on each week, and I asked him, were people actually selling physical gold and silver over the past week? Absolutely not. They saw an uptick in demand. So I wonder if this is not another Wall Street phenomenon where, you mentioned people, do they look 100 days from now and just assume everything's going to be okay? And I would say the chances of this getting naturally resolved are about as likely as Ben Bernanke being correct about subprime being contained. I mean, here's the dollar index, which, keep in mind, 70% of this is the dollar against the euro and the Japanese yen, other hyperinflated currencies. And despite that, you see it's taken, it was back over 100. Here we have 102 back in March of last year. What are people supposed to think when they see trillions getting printed at a pop like we are right now?
Yeah, great point. And that's just going to continue, right? Not just by the US, but by the world economies, the nations around the world. It's going to be a race to the bottom of currency devaluation and who gets there first. The US dollar might be the last to get there, but it will get there, make no doubt about it.
Yeah, it certainly does seem to be the case. And perhaps you would actually be a great person to touch on, maybe that's the demand side, but in terms of the supply, how that's shaping up. Silver Institute put out a piece a month or so ago where they projected a 300 million ounce deficit in silver for 2020. And obviously, you're one of the people that the world is counting on to bring us silver. So, what could you tell us there?
Yeah, interesting. So, and that's a point that's coming up a lot of late. I don't know whether the market's just kind of switching on to this, or in particular the retail market, but that notion of scarcity. Now, I've been in the business for 30 years as a geologist, worked all around the world on various deposits, gold and silver, and I can speak firsthand to the fact that deposits are getting more and more rare to find. The really big ones are the ones that move the needle, so to speak, for intermediate major producers. They're getting really rare. And in fact, we had National Bank do a bit of a study for us last year on the totality of all the gold and silver declared resources around the world. And it turns out there's 3,500 of them around the world in the Earth's crust. Interesting thing happens, however, when you start to apply different sort of filtering criteria to that list of 3,500. Remove all the deposits that produce less than, or can produce less than 100,000 ounces per year. Remove all the deposits that are not in a tier 1 jurisdiction like Canada or the US. And then finally, remove all the deposits that will cost more than $500 million to build. And there's literally only 4 in the entire planet, and we're one of those. So there's scarcity, and I think that's what you're speaking to. That scarcity is starting to become apparent to many.
Yeah, and interesting you mentioned that, because we hear the crypto crowd. They talk about Bitcoin. All right, well, Bitcoin is a finite number, which I agree with. Yet they say, well, we can get more silver and gold, but it's like, sure, that's like saying I can get $1 billion. A little easier said than done. It's not. I mean, we're kind of going the other way rather than just like big piles lying around there.
Agree. Oh, absolutely. And that might be part of the reason why we haven't seen the M&A trade sort of really creep into the gold and silver sector, specifically within this niche of company that we are part of, which is the Advanced Explorer Junior developer. When you see companies like Kirkland Lake, for example, who came out with their earnings report yesterday, they're making piles of cash, producing gold and silver. And rather than buy things out of the gate, they're buying their own stock back, or they're declaring these special dividends. And there are a myriad of other companies who have done the same. Eventually, they're going to get tired of doing that. Somebody's going to say, well, look, you have to show us some growth, so spend some money, buy some things, and that's going to happen. But I think all of this kind of speaks to the scarcity, Chris, in terms of gold and silver assets around the world.
Yeah, and you touched on a little bit there. Do you think we'll see more consolidation? We saw Warren Buffett buy a stake in Barrick, and as some of the majors need deposits, maybe we've seen a little bit more in gold, but do you see that happening in the silver side?
Absolutely. I tend to look at gold and silver on the same spectrum from a geological point of view, because they often come together, right? You can have a silver rich gold deposit or a gold rich silver deposit, but they tend to be, typically speaking, in nature, come together as one. So yeah, there's scarcity, and I do see the M&A sector picking up. My guess is probably mid-year this year that things are going to start to heat up significantly. In fact, I'm actually hearing a lot of chatter on the street from my banking friends, to the extent that, yeah, we're looking at a lot more M&A files than we did late last year.
Yeah, which is interesting, because if you went by the commentary in the public or social media where it's like, when's the gold and silver price going to go up? When's it going to move? Well, I mean, gold's kind of close to its all-time highs. Silver higher than it's been the last 4 years. But like you said, a lot of these companies, even gold and silver don't move anywhere, are making a lot of money. And I think that gets missed, where it's like, yes, I don't know. I think gold and silver in a freely traded market would be higher than they already are. But even where they are now, can you somehow put in perspective what that looks like for some of these companies?
Yeah, well, I guess probably the easiest way, Chris, is to and I'm going to make a broad statement here, to the extent that most of the gold producers that are out there today would be working off of mine plans that are predicated on reserve statements that were done I'm going to guess at $1,300 to $1,400 gold and probably $15 to $17 silver. And so putting that into today's context, well, yes, the reserves were predicated on those two metal price inputs, but they're producing into environments of $1,800 and $1,900 gold and $25 to $27 silver. Man, they didn't expect that kind of margin. So they're making money hand over fist here. And they're, while they kind of figure out what to do with it, yeah, we're going to pay a special dividend, or yeah, we're going to buy our stock back. But again, I've seen this before. It's a cycle. I've been through 3 of them, and this is the way it starts. We're buying our stock back because we don't see anything of value. We're dividending this money out to shareholders because they like dividends, but eventually they're just going to buy stuff.
Yeah.
Because that's what they do.
Yeah, and you mentioned that you've been through 3 of these cycles, especially as there's a lot of people who are coming in new to gold and silver now. Anything else that you've seen a couple of times and you're prepared for now that a lot of people might not even be thinking about yet that you could pass along?
Yeah, I mean, there's sort of the notion of sterilizing resources. I think that's probably it adds to the scarcity piece that we talked about earlier, the fact that there's just not a lot of big gold deposits and silver deposits left in the Earth's crust. But having worked at mining operations for mostly the sort of the first half of my career, I know what happens at a mine site when the gold and silver prices are low. Basically, the marching order is from management to the operator. We need to make some profit come hell or high water. So you need to go for the good stuff, the high grade. And so what happens when you go for that high grade, quite often you're sterilizing a lot of other resource that you wouldn't normally mine in that circumstance. And I think that just adds to, it fuels that scarcity piece, right? I don't think, personally, I don't think that piece is really set into people's thinking yet. It will, though.
Although I guess if you can see that, you have experience and can spot it, does lead to some good opportunities, right?
Oh, for sure. Absolutely. Yeah, no question.
And again, for folks who might be new, based on your experience, when you're looking at, and we'll get to Integra in a second, but just as an investor, when you're looking at these projects as someone who's done it, who's been there, what do you look at first? What red flags do you watch out for? So when people see, 10 prospectuses, what's a good starting framework of how to decipher between them, which one they want, which one they don't?
Yeah, and I get asked again this question that comes up often. So how do I do my own investing, right? And I typically invest in my own sweet spot of, again, that spot of the mining companies, which is the advanced junior explorer developer. It's those companies, junior explorers with the most advanced assets, which have the best shot at getting into production or the best shot at getting bought out. And that's where I invest most of my money, in addition to Integra. And top of the list, I always look at betting on the horse and betting on the jockey. So the asset needs to be big and outstanding. However, it has to have a good jockey. And in the case of Integra Resources, not to tout our case too loud, but I mean, we've been there, done that before. We just came off a big win selling Integra Gold for $600 million, and we believe that recipe, that playbook that we played at Integra Gold is going to work very well for Integra Resources as well. So, and that's where I invest my money as well, in not necessarily in Integra Resources, but in other advanced explorers. If there's a team that's been there, done that, I'll bet them all day long.
Yeah, I certainly agree. And interesting, as I ask a lot of different people in the mining world, that's generally the common answer and makes sense. It's kind of like that rule of 5, where you look at the 5 people you spend the most time around and might be some reflection of them. Now, on the other side of that, what is a red flag? You don't have to name names. You can if you want, but I mean, and just what's something that if you see that, you run, you're like, don't want any part of this?
Yeah. Well, so okay, well, just taking a step back, I typically put my own investment dollars into tier 1 jurisdictions. So a company with an asset that might be big and robust, but that's in a far-flung part of the earth where politics might be an issue or rule of law might be an issue, I stay away from that now. I've seen that through, at various points in my career, what happens. You can have the biggest asset in the world, but if it's in a tough jurisdiction to develop in, or if it's politically unstable and there's no rule of law, there's good chances it could be worth zero. And so I'll stay away from those types of things. I also, and this next point relates back to management teams. I'll also stay away from management groups that don't have a track record of having an ability to tap the capital markets when they need to. That's also critical for me.
Yeah, that makes a lot of sense. And I appreciate you mentioning that. I don't know if anyone's brought that up before, where I think a lot of entrepreneurs learn it's great to have a great product, but that marketing piece, pretty darn important too, if you can communicate to people. So, if you have the greatest idea, but no one understands what you're talking about, which, with all due respect, sometimes geologists, it takes a little while to, because
Yes.
their knowledge level is up here. And I go to some of I remember even when we still had in-person conferences, there'd be some times where it'd be just, like, slow down, man. You got to break it down. And it's nice to see that you have a great ability to do that. And again, I will just mention that you have quite a high recommendation from a lot of people I trust. And with that said, perhaps could you give folks that are not familiar with Integra an overview of the model? And you can talk about what you learned from the gold project and are applying here, but just the basics of what you guys are doing and how it shakes out.
Yeah, sure. So just kind of starting from a pretty high level, Chris, the asset Delamar that we own 100% of is basically comprised of two different gold and silver deposits. And if you look at historically what was mined in this part of southwestern Idaho, which is a state which was really founded on mostly silver production in the past. It was kind of the wild west of silver production, and silver and gold in terms of historical legacy in Idaho, second only to the California gold rush, where the gold rushes into Idaho back in the 1860s. So really prominent from a gold and silver production perspective. So we bought an asset from Kinross just over 3 years ago that was shut down during a low gold and silver price environment, the late 1990s, early 2000s. If you were in the business then, as I was working at a mine site, it was nuclear winter. Nobody was making any money. And so there was no margin to be made. So they literally stopped mining. And we saw that all over the world, right? There were assets that literally stopped mining because they just, gold was below $300 an ounce. Silver was, at all-time lows at that time. So what that means literally is that there was potentially a lot left over for those assets, right, that were shut down during those periods. So we suspected that there was a very large gold resource endowment and silver resource endowment. And as it turns out, our first indications of resource estimates out on the project 2 years after acquiring the project, we got to 4.4 million ounces of gold equivalent. Of that, there's 120 million ounces, 116 million ounces to be precise of silver. So this is one of the things that, just relating to the silver piece, that surprised a lot of people. We talk about gold in the context of deposit and revenues, but there's a very large silver component to this asset that comes as a surprise to people. It's one of a handful of the largest undeveloped silver deposits in the Western U.S. And so we put together this PEA study, which is kind of the preliminary look at what economics could be. We did that in 2019, and we used a gold price of $1,350 and a silver price of $1,690, and we came up with a really good number with a really low capex. So something that we could build, which was the hallmark of what we did previously at Integra Gold. And even with those, relatively speaking, compared to today, low gold and silver prices, the economics were great. 43% after-tax IRR, $350 million US NPV. If you start factoring in current gold and silver prices, well, then you're talking about NPVs that are well over $600 million and IRRs that are well above 60%. So really robust. But just to talk briefly about silver, because it's become really interesting to us. Because we use 1690 as a basis of calculation for the resource estimate and the PEA, And now with silver touching $25, $27 an ounce, that's a 50% increase.
Yeah.
So for us, we start to think, okay, well, we weren't recovering a lot of silver in the original production premise. How can we recover more? And we're looking at that now in terms of what additional technology implementation we could add to the heap leach to recover more silver. Same to the mill that we have planned. And we think we can get there. And silver, we believe, will become a much larger economic output from the project in this next iteration of our pre-feasibility study that's due at the end of this year.
Yeah, and I'm sure that if folks like myself and the other silver fans are right, that basically the Fed and government are guaranteeing a higher silver price going forward, that numbers continue to look good. One technical question. We won't get too technical today, although I did have a newsletter writer who comes on the show from time to time, and he wanted to know what type of methodology are you going to use to process the underground sulfide ore?
So in terms of the sulfide ore, whether it's open pit or underground, that's going to require milling. And in terms of the milling technology that's going to be used there that we've forecasted in our PA rather, that's conventional off the shelf milling technology. It's crushing circuits, grinding circuits, flotation circuits, regrinding circuits, and then cyanidation as the final product in the end of the day. And that's what I've just mentioned there is not non-standard. It's very much industry standard around the world, and that's how we would look at processing sulfide, be it from an open pit or underground.
Okay, well, that makes sense. And I guess based on where you are now, if you can even simplify it to what basically is going to determine if things go great, what are the hurdles, what keeps you up at night and you're preparing against, what's the key thing investors are going to want to look for to see how things shake out?
Well, so we have really two different investor bases, which we believe works well for a company. Just to appeal to one or the other, I believe is you're missing part of the puzzle. So we have a large crowd of investors that follow us because of exploration results.
Yeah.
And which means that, and we are big believers at driving value at the end of a drill bit, which means we drill a lot, and we try and keep a couple drill rigs in operation at any given time throughout the year. And we've been releasing some pretty spectacular results to the market. The market seems to like that, and our share price responds. So that's going to continue for the foreseeable future. Then there's the second crowd that, yeah, they like exploration results, but they also like to see a project get de-risked with studies and then move through the hurdles of permitting and then on to development. And to them, the key part of this year will be the resource update mid-year, and then the pre-feasibility study in the beginning of the fourth quarter of this year, which is really going to spell, what potential value is there to be derived on this asset in terms of building it. We think that's going to look different and, quite frankly, better than the PEA study that we put out last time.
Okay, well, some good things to look forward to. And another thing I know is on top of investors' minds, and I have the page pulled up here. Perhaps you could just walk us through the capital structure and give a rundown of how that looks.
Sure. So we've got about 56 million shares outstanding currently. Sorry, 54.6, sorry, million shares outstanding. So really tight share structure, which is why our share price reacts, when we've got news, it reacts quite strongly. In terms of warrants outstanding, we have none, so there's no warrant overhang, which is great. And in terms of insider ownership, management and insiders or reporting insiders would own, roughly speaking, just over 6% of the stock. We've got some very notable individual shareholders, Pierre Lassonde being one of them, a big gold and silver bug, obviously. Yep. And we've got a very large roster of institutional shareholders who made a lot of money on Integra Gold and essentially followed us into Integra Resources and have been very loyal to us, which has been great. So, the mix is good. What we're trying to do now with the New York Stock Exchange listing, which is new for us, is try and generate better trading liquidity in the States, because we know that those gold and silver bugs are out there in the US retail crowd specifically. And so we're trying outreach programs to get that trading liquidity going in the States. In fact, our trading liquidity now in the US is as strong as it is in Canada. And we believe that there's a lot more potential to be added in the US in terms of trading, especially in retail.
Yeah, and hopefully I won't get you in trouble by me saying this, but as a former equity options market maker on the New York Stock Exchange, I hope there are equity options listed, or maybe I could call and get them listed. And again, you don't have to comment on that. I'll just have my own fun, just imagining shopping for call options, and we will leave it at that. Of course, not licensed financial advice, to be clear, in today's regulatory culture. George, it's been great catching up with you. Any final thoughts or anything else that you'd like folks to know, or that they would be well served to be aware of?
Yeah, look, I'm not going to tout the company. How about I tout the industry, which is don't look too closely at the gold and silver tape on an hourly basis. $1,800, $1,900 gold is a great price to be producing into. $25 silver is a great silver price to be producing into. Nobody should be complaining. Gold will have its moment. All the factors are there for that perfect setup for gold and silver to really run here. The holy trinity is still there, and they're just waiting in the wings to jump out and push.
Yeah, I love how you phrase that. I think sometimes that the best thing most gold and silver investors could do would be go on vacation for like 2 or 3 years. Don't take your Kitco chart and the refresh button and come back, and things will probably look pretty good. We will see how it goes. Fortunately, you have the best gold and silver salesman in the Federal Reserve and the White House and Congress ever, making sure that whatever time it takes, we'll get there. But George, could you just mention where they can find a website and the address for that again, please?
Sure, it's www.integraresources.com. And we trade on the TSX Venture under the symbol ITR.V, and on the NYSE, New York Stock Exchange, as under the symbol ITRG. That's the best place to look.
Well, I appreciate that, my friend. It's going to be fun to follow along. It was nice meeting Josh, one of your guys, actually back in Denver. I think it was last year at a company breakfast. And it's been kind of nice for me finding out, especially, and it may have actually been that morning where it hit me. It finally all made sense in that, like everybody knows there's Tesla stock or Facebook. Yet if you're looking for an industry where some of these companies that aren't, multi-billion-dollar companies, but if you really do your homework, go out and search, there is opportunity out there. I'm proud to say that I think that you guys are one of the ones to look at. By all means, people, please do your own due diligence. But George, I appreciate you making some time and sharing what you're doing so that people can be aware of that.
Great. Thanks for having me on the show, Chris. I really appreciate it. Let's do this again. This was fun.
Absolutely, my friend. I'll look forward to that.